So in this video, I'm just going to go do a tutorial on how to make, or not how to make anything, but how to understand all this stuff when I'm talking about it. So I don't have to go through it in every video. You could just watch this one video, and when I'm talking about something in another video, you'll know what I'm talking about. So I have a work tab with several ETFs. I have to put them in the work tab, so I don't have every ETF. I have the Qs, I have the SPY, I have the Dow Jones, and many some newsletters, some ones I've created myself. I have the TAN Invesco ETF. I just pull this down and I select whatever ETF I want. Right now I have selected the TAN. I'm going to leave it there. I have I select whatever ticker I want out of that ETF. I have Shoals selected. We'll leave that there. And then for Shoals, the PE is 48.21, the forward PE is 12.61, and the PEG is 2.74. I have this selected daily. I could change it to weekly, but we'll leave it at daily. I have the 21-day moving average. We could change this to any 63 or 189-day moving average. I could change it to the weekly and use the 10, 30, or 40 week. Because we're looking at the 21-day, we have 21-day over here. If I change this to 63-day, it'll be 63-day over here. And then we get what the percentage above or below the moving average we're looking at. I have greater than 0%. If I change this to less than 0%, then we will get the stocks that are below the moving average. If I change it back to greater, we'll get the stocks that are greater than the moving average. Maybe I want to see stocks that are just below the moving average, so I can put greater than negative 5% from the moving average. So I see two stocks here, Nova and CWEN. We have the price, we have all the moving averages and what they are right here. We have resistance, support, stop loss. That's just a guide, not a suggestion. The price, we get a buy signal if the price is above every single moving average. If it's below any moving average, we get a sell signal. The 10-week has to be, the price has to be above the 10-week. The 10-week has to be above the 30 and 40-week to get a buy signal. If anything is off, we get a sell signal. And the same applies all the way down for all the moving averages. The market cap of what the stock we're looking at, which is Shoals. And then over here we have alpha. So what we're looking at here is the stock, a risk-free interest rate for the last 6 months. So this one right here, DQ, we would have been better off having a risk-free interest rate than investing in this because we have underperformance. However, Nova, we would have been better off owning this for the last 6 months because we would have had massive outperformance from a risk-free interest rate. So I look for stocks with high alpha, low beta. Typically for to take on, if you want to take on less risk, you want higher beta or higher alpha, lower beta. This is the beta of the stock we're looking at. This is the RSI of the stock we're looking at. This is the percentage from its previous close. This is the close, the open, the current price, the high, the low, and the average today, the high, the low, and the average for the week, and the percentage off its 52-week low and off its 52-week high. Over here, we're looking at the VIX, what is currently at, the high, the low, and then just an average of those two numbers. These are the 5 best performing stocks in this ETF today, 5 worst performing stocks in this ETF today, and what the relative volume is and the percentage change, which there's not too much movement in this ETF. You could see stocks move as much as 20%, 30%, even more in these ETFs in either direction, up or down. So right here, we're looking at strength. So we're looking at the TAN ETF. We're looking at the 21-day moving average. These are just, it's the same thing that we were looking at in the moving average screener, but this just tells me the ascending order, which is what we have in that screen, and then in descending order, the same stocks and how far they are above their moving average. Over here, I have a table of all the ETFs I'm tracking. I even have, excuse me, an ETF of ETFs, and that's ranking 1 above its 21-day moving average. If I change this to the 63-day, this whole table will change. But the TAN is basically the number 1, and then the home builders, then healthcare, and that's based on the 21-day moving average, how high we are above the 21-day moving average. As you can see, as we go down, we have a lot that are well below the 21-day moving average. And we're in August, so the market is showing some seasonality weakness right now. If we go to the alpha page, I can select this here to whatever time frame I want, the 3, 6, 9, or 12 months. That's how many days are in each one of those months, and that's how I had to do it. So if I change it, 182 is 6 months. If I change this to 91, you'll see it change to 3 months. If I change it back to 182, it's 6 months, and so forth. I have this in descending order by alpha. I have this in ascending order by beta, so I might want to look at a stock that has low beta, high alpha. So if I'm come down, this stock has alpha on the market, has beta of 0.87. So C1 is maybe interesting. I might take a look at it. Could be boring. I'd have to do further research. Then I have the daily time frame, daily chart here. This red line changes, the blue line never changes. The blue line is the price action as of up to yesterday's close. If I change it to the 63-day, you'll get a 63-day right here. If this is all our volume, this white line is a trend line of the volume. This purple line is the 50 RSI, considered as support and resistance. If we go to the right, you see we broke above it. Right now, because I have the 63-day selected up here, we're going to have the 63-day selected right here. If I put that back to the 21-day, it'll select the 21-day. And then we get the percentage above or below the moving average based on the period I have selected and going back however many days. I consider the 50 RSI a buy signal, anything below it a sell signal. That's why I have this. When it's above 50 it's green, when it's below 50 it's red. This right here is different than the moving average screen. If the price is above the 21-day, we get a buy. If not, we get a sell. And then the 21-day has nothing to do with the price here. We only if it's above the 63-day, we get a buy. If it's below the 63-day, we get a sell. And if the 63-day is above the 189-day, we get a buy. If not, we get a sell. And the same applies to the weekly and the monthly charts because I have the same thing and the same percentage things over here. If we go down here, we have Fibonacci retracement. We're looking at the 63-day right now, right? I believe, yeah, 63-day. So we have 63-day Fibonacci, 63 periods for Fibonacci. Whatever I select up here is the period I get for Fibonacci. This is just a real simple, if the price is up from yesterday, we get uptrend. If it's down, we get a downtrend. Same applies to the 21-day, 63, and 189-day. This is our ATR. This is ATR times 1.5, times 2, and times 2.5. This is our percentage, stop loss percentage for ATR. And then this is what our stop loss should be. This is the price, the 21, 63, and 189-day moving average. This is the Chaikin Money Flow, which is an accumulation distribution indicator. If it's negative, hold on, what's dogs bark? Okay, you might have to deal with some dog barking because I've made this video too many times, so dog interrupts me. This is the Chaikin Money Flow. If it's above 0, that means we're in accumulation from institutions. If it's below 0, we're in distribution. So maybe we'll see this go into accumulation today after today's close, or trending up. And we have a chart that will look at this Chaikin Money Flow, but I'd like to have it right here just to see real quick. Beta, alpha, RSI, we have that in all the other charts. And then we just have a quant score, anything between 70 and 85. I consider like a hold, 85 and above a buy. That's measuring things like return on equity, cash flow, return on assets, debt, things like that, and then giving it a score. This is just the risk you would take because our stop loss is 16.83%, and then that's below the 21-day moving average, so our overall stop would be 28.14%. Our weekly moving average, the volume, and then this is just the same as the daily. You know, we're looking at the 40-week right now, so that's the percent above or below the 40-week. And then we also have the monthly time frame. Right now I have it selected to the 3-month. I can select it to the 3, 6, 10, or 12. For the weekly, we can select it to the 4, 10, 30, or 40-week. Leave this. We'll change it to the 6. And the red line always changes when we change, because the red line is what's moving. The earnings model. So you see, I'd like to see this quant gauge go into the green. That would have to be 85 or above. We have it at 50 cents because it's projected to earn 48 cents. I have all this rounded to by 5s, but then these by 1 percentage point, so I can't do 17.65% unless I type it in. But this is close enough. It's around 1024 is the present value for this stock, and it's about 70% undervalued based on this model here. And we're projecting out 17% growth rate for 5 years, and then we cut that in half for years 6 through 10 using a 15% discount rate and a 15 terminal multiple. This is a little different. This factors in corporate bond yields, and this is usually more conservative model than this model, projecting things out, and it has an acceptable buy rate of 817, so we're only about 36% undervalued versus 70% undervalued here. Then I just have relative volume screen on a weekly. This is on a daily time frame. I also have it on a weekly time frame. VWAP, where we are in relation to VWAP, we're above the VWAP line. Daily candlestick, you know, are we at resistance? Are we at support? Where are we in between? So we need this 612 is resistance. Right now it's 608, so it's struggling to get past that. We need to see this break out to new highs. We want to see it bust through this wall here. And this is only 42 days of data, because otherwise the charts get kind of messy with the candles if you try to do more than that in Google Sheets. Weekly candlestick, weekly MACD. We want to see this orange line cross the red line. Like here is a good time to buy it. Now it's bearish. We want to see that go back to a bullish signal. Then we have a 5-year chart, and we're at the 30 week. I can select this at a 4, 10, or 30, 4, 10, 30, or 40 week. Right now we're at the 30, and we're holding support there. But this could fall all the way to 443 and still be above this 30 week. We're 37% above that 30 week. Now we can go over, that's our 5-year. I'd have to go back to the yearly chart. And we're in a downtrend, but we broke out of that downtrend. We would find support here at 535. Because once we break out like this, usually we'll find support on the top channel, the upper channel. We have a bullish MACD cross on a daily time frame, and we're in distribution, but we're trending back up towards accumulation. So we want to see this cross this 0 line. That's how I sort of analyze stocks, how I look at stocks. It's a lot to process and all that, and you'll still get stuff wrong. But it's better than doing nothing. You know, it's better than just throwing darts, in my opinion. And you just got to manage your risk. So, because you will get stuff wrong, if you manage your risk and you're disciplined, I think you'll do okay. I've done okay for about the last year. I don't have 20 years or 30 years of doing this like some people say on YouTube, but for about the last year I've been doing okay with this, outperforming the market. So if that is something that interests you, I'll be making videos, and then you can decide whether or not you want to buy different stocks based on what you see in these videos. Thanks for watching. Consider hitting the like and subscribe button.